Welcome, everyone. I'm delighted to host the conversation today with Ruchir Sharma, chairman of Rockefeller International, a longtime colleague, advisor, and I'm happy to say friend. He's a popular market commentator on TV and in print. He's the author of best-selling books, including his latest this past year, What Went Wrong with Capitalism. He's recently published his latest piece in the Financial Times outlining the top 10 global trends in 2025. Ruchir, thanks for joining us today. Your report is fascinating, and we won't be able to cover every trend, but we're going to hit the major themes and the salient details underneath those. So I wanted to start, which I thought would be fun and fair, with something from your 2024 predictions that worked, and then something that didn't go where you expected it to go. So can we do that?
Yeah, sure, Greg. So when I look back at what I said in 2024 at the beginning, one of the big trends I highlighted was that this was going to be a big year for democracy, which is a fact. That in fact, we'd never had so many elections in 200 years or something as we saw in 2024. So massive political year. What I had said was that in most places, the incumbent is likely to be in trouble. And that's because there's so much dissatisfaction amongst the average person, whether it's the average American, the average European, about how the system's working for them. So I'd said that the incumbent was likely to be in trouble. And if you look at the statistic in terms of 2024, it's quite fascinating that the incumbent party lost vote share in every single developed country that went to the poll. So massive, what we call anti-incumbency. And I think that was also something which played a role in the US election. So that's the good part. Now, what didn't really work out is the fact that I thought that Europe would be more resilient than it was. We thought Europe would be more sort of, would do better, but the core Europe, France and Germany, are in trouble. Germany's become this...
UK, if you lump it in there, it's not in Europe, but those three countries in particular. Right?
That's right. And they're very large. Now, there is a flip side to this, which I think gets glossed over, that all the European countries which were in crisis a decade ago, those are doing relatively well now. Greece, Spain, Portugal, the pigs, as they were called at that point in time.
They course corrected. Pretty effective.
They course corrected. Yeah. I think there's an important lesson here, even when countries go through a crisis, it's only then that they carry out big reforms. Problem with these very Germany, France type of countries is that they're large, they're not that dependent on foreign capital, so they think that they can sort of get away and it's slow decline, and there's nothing which is there to force them to change. But these other relatively smaller European nations, they were forced to change. And so that's the change we saw. But having said that, I think that there's no doubt that Europe did a lot worse in aggregate than I would have expected.
Okay, well, that's fair enough. And the elections are remarkable, but every single one. I didn't realize it was every single one. Obviously, it's a major trend. So let's fast forward now and come into 2025. And one of your overarching themes, and this kind of cuts across several of your trends, is contrarianism and the fact that something that has been working may have reached its peak and go the other way. Momentum strategies. So can you start by talking a little bit about, that intellectual, substantive tether to a whole bunch of things you're talking about?
Yeah, historically, as we grew up, being contrarian used to be cool, which is that you came up with a contrarian view, you went out with that. It's very difficult to do because it's a very lonely place, but that was cool. What's been remarkable about this decade is how this decade has continued to reflect the same trends as that happened last decade. What do I mean by that? America has been outperforming significantly now since 2009.
By the way, when you run through this, you've looked historically at decades for a long time. And you talk about how typically from one decade to the next is a new driving theme. So this might be the first decade in a long time where you haven't had a new driving theme, right?
This half of the decade is looking very much like the entire previous decade did, which is incredible outperformance of American assets led by the big tech companies out here, the dollar remaining stronger, all the international markets doing very poorly compared to the US or most international markets. So these big trends that we saw last decade have continued to roll on this decade. And I think that we could be at a point now where it's become so stretched that we could get some snapback in this, and a pretty meaningful snapback. I mean, if you just look at the data here, America's outperformance versus the rest of the world has reached ginormous proportions now. The American stock market today is nearly 70% of the global MSCI benchmark, which everybody uses.
Relative to 27% of world GDP.
Yes. So, this has become very stretched. The American market's valuations, in terms of it's trading at 23 times, the rest of the world's valuations are close to record lows, like emerging markets. I grew up seeing this. And today, here's the most fascinating stat about emerging markets, that the valuation gap between the US and emerging markets today is the lowest it's been since the depth of the financial crisis in Asia and Russia in October of 1998.
And we're going to get into this, but this could be partly America more stretched, and we're going to talk about the United States, but it also could be partly a lot of these other markets, particularly the ones performing well, like the ones you mentioned in Europe, being undervalued because people are just saying invest in the U.S. and leave everything else out, right?
Yeah, there's a flood of capital which is coming into the U.S. today. It's pushing up the dollar. By some measures today, the dollar is the most expensive it's been since it became a floating currency. When I travel the world today, the most expensive place to stay in a hotel or eat at a restaurant in the world is New York. Like a decade ago, I was saying the opposite, which is that a decade ago, America felt so cheap in terms of that you travel. What a great country. It's always been a great country, but you felt it also felt cheap, right? Yeah. But today it's become the most expensive on many metrics, not just the stock market, but the dollar and just travel and staying at hotels and eating at restaurants. This has become the most expensive. So I think there's a value case here, finally. Now, contrarian investing doesn't always work because it's not as if trends turn around every year and some people love to be that. No, it's not that. But I feel that the trends have become so stretched now that one of the big themes I have for 2025 is that the contrarian investor who has felt dead. I'm a big believer in America. I came here, I'm a huge fan of this country and stuff. But if you look at the long arc of history, going back the last century, whenever America's had a massive decade of outperformance, typically in the next decade that outperformance has given way to some underperformance. So in the 6 of the last 11 decades, the American stock market has in fact underperformed the rest of the world. So it's not an article of faith that every decade America has to outperform, even if over the long arc of history, America is the best performing stock market in the world. So I think that this is something to keep in mind, that trends today are so stretched, valuations are so stretched, sentiment is so stretched that in 2025, expect some snapback to happen. That's one of my big, bold calls for 2025.
And again, one of the things that you're clear on is that you're still a believer in the American economy and the innovation here and artificial intelligence, but you're talking about valuation against history and the fact that it's really become very stretched.
Yeah.
And we can transition to another topic that you talk a lot about, and I do, the budget deficit.
Yes.
Let's talk about the budget deficit, which I believe was on your list for 24, right?
Yeah.
And now it's even bigger. So you're leaving it on the list for 25, right?
No, like in 2024, what I said was at the beginning last year was that the bond vigilantes had been dead around the world.
Yeah.
And they were bound to come alive.
You were right.
Right. And so if you look at around the world over the last year, all these countries now, the budget deficit concerns have come to the surface. The only country where it's not really sort of making an impact is America. But the data has gotten considerably worse because America is running a budget deficit today of 6% of GDP. Historically, when you had full employment in the last 50 years, when America has run budget deficits anyway, the budget deficit has been close to 1% of GDP. So now you're at 6% of GDP. And if you have the tax cuts which are extended in 2025, without any major offsets through spending cuts, it'll be 7% of GDP. Now, this is really getting into uncharted territory. And one data that I have here, which really sort of I think people should keep in mind, it now takes $2 of government debt to generate $1 of GDP growth in America.
Wow. And what was that historically?
Okay. So in the 1970s, it used to be 30 cents.
Wow.
Even a decade ago, it used to be less than $1. So it's a massive acceleration that's happened.
So even after the financial crisis,
yes,
it was still less than $1.
Yes. So this has been a bipartisan project, you can argue.
100%.
But the whole issue is that it now takes $2 of government debt to generate $1 of economic growth. So yeah, at the surface, economic growth can look fine, that we're still growing at 2.5%, 3%. But how long can you sort of keep running such a budget deficit to get there? So now the incoming administration will try and do something on spending, I hope. But if they try and do something here, we should be prepared for at least some growth slowdown to take place because this has been an artificial impulse that's been driving the economy. So by the time the good stuff happens, let's say that they're successful on deregulation, they're successful in cutting some of the government fat. But in the short term, at least, which could be a year, and I think that most administrations should think that way, which is that do what you can in the first year to clean the slate.
Well, they clearly are looking to come in with some momentum.
Yeah, but in terms of do that. But my fear is the fact that people are not appreciating that if you try and claw some of this back, at least in the short term, you'll end up getting a bit of a growth rate.
I have a hypothetical for you, though, and it merges several of the themes that you've written on for so much. First of all, your book, What Went Wrong with Capitalism, one of the central themes is excessive regulation. And in that book, you talk about the fact that there are 2,000 federal regulations added every year. And in the 50-year period you looked at it, only 20 were taken off the books.
Yeah, the last 20 years, only 20 got taken out.
So what if this administration was more successful in pulling back regulation? Could that be a counter to hopefully the fiscal, pulling the fiscal deficit in and spending less? Could those two things balance in the United States over time?
Yeah, over time that could happen, but I think these things take a while to play out. My concern is that government spending has played a very powerful role in keeping the economy artificially high over the last 2 or 3 years, and that as that comes off in 2025, I think that you will get a bit of a growth vacuum before deregulation helps. And there's a very important point which brings me to one of the other trends that I speak about, which is the shift in the growth mix. That if you look at the growth in the last few years, it's been led by the big companies everywhere. The big companies, big tech companies. And remember, they are, in a way, the biggest beneficiaries of regulation because one, they're able to afford it. And two, they're able to sort of, have regulation written like the way they want.
They lobby much more effectively. They've got the resources and they're there and they're pushing.
Yeah. And so the big beneficiaries, in fact, if you have a serious deregulation drive, could be the small and mid-sized businesses. And you've seen even after the election, there's been a big pickup in their confidence.
Yes.
Because before the election, confidence of mid to small size businesses was at the lowest level outside of a recession. Like other big trend I have is a shift in the growth mix and even in the stock market performance, therefore, that some of the mega cap companies sort of slow down and some of the small to mid-sized businesses get a lift because of the deregulation drive. But my only caution here is that these things take a while to play themselves out before on the ground these things happen. So much of this is state level, so much of this is local, right? So the federal can drive only that much. Yeah. But yeah, I'd say that, so one of the big trends I have is that this shift takes place in the growth mix in the coming
That's interesting because that pulls together so many of your themes. Right. Deregulation, impacting smaller companies more, and then smaller companies, small cap outperforming the big tech companies.
Yeah.
In part because of the regulation being taken off of them that they can't afford in contrast to the big companies.
Yes.
Let's move on to another trend, and this is artificial intelligence.
Yeah.
Which is, maybe the game changer or, the thing that we've got to figure out how it factors into what you're saying, because clearly there are people who believe that it's possible that this breakthrough technology, and it looks like it is, we'll see, how it impacts business and employment over time, but could accelerate productivity and therefore growth, offsetting some of the, hopefully lower government spending and things like that. How does AI fit into all of this from your vantage point?
Well, I think that one of the implications we could have of AI, at least again for 2025, is that the big strength of the tech companies that investors would love, whether they would generate so much free cash flow growth, right? Because they become so profitable and do that. Now,
some of them are sitting on $500 billion of cash, right?
Now they're spending so much because on AI, it's become the gold rush, which everybody wants AI and stuff like that. I think there could be some,
and it's expensive because you've got to get you're buying power, you're building plants to create the power for AI.
It's a massive capex cycle. So there have been two drivers of economic growth in the US. One has been government spending. Second has been the capex that is being driven due to AI.
Those are the two biggest.
Yeah, those are the two biggest, drivers which have kept the American economy growing above its underlying trend. But now I think that in 2025, some questions could be asked from investors and stuff that, okay, you're spending so much, where is the return? So there's big strength that these companies had of generating massive free cash flow. I think some of that could come into question because it's already slowing down. If you look at the free cash flow growth of these companies, it's slowing down. So both earnings, free cash flow growth of these companies could slow down. And I think that investors could ask those questions more. And that is one of those things which could impact, I think, both the performance of these companies and also in terms of the overall economic momentum coming from AI for a while. Something we saw in the 2000s as well, that you had the internet revolution, huge, here to stay. No one questioned that, but the companies who were the real beneficiaries of that we only got to know a decade later.
That's true.
Yeah.
I mean, they were all, and they struggle with profitability and with cash flow and everything else.
Even Amazon back in 99, 2000 fell 90%.
Yeah.
And then it started a big journey up. So I think, but this linear forecasting today that these are the companies which will benefit from AI as well, and they'll be the big beneficiaries of that. They'll spend a lot also, benefit a lot also. I think there's a bit of delusion there.
And what about AI, the impact on productivity and on jobs? You said to me when we first talked about this a year or two ago, really that recently. I mean, it's really been that. It's just the last few years.
It's 2 years.
That never in history has a new breakthrough technology like AI costs more jobs than it's created.
Yeah.
And we talked about some of the jobs that you would never, like in the 1990s, and the notion of a search optimization engineer.
Yeah.
Nobody knew what it was.
Yeah.
Now you have these people all over the place.
Yeah.
So do you still believe that AI over time, from a productivity and employment standpoint, is going to have a real positive impact on productivity without reducing, employment and creating significant reductions in the number of jobs available in an advanced society like the United States?
Yeah, broadly. I mean, I still think that human ingenuity trumps still any, machines and stuff like that. So the line that we had used earlier, which I still stand by, is that over history, what technology does is that it destroys professions, not jobs. And I still feel that is the operating line that I would use for the coming year. But I'm concerned the fact that this gold rush and then people finding, okay, what are the returns on it? Those questions could be asked much more in 2025.
And you have a good example in that you just gave, which is the internet.
Yeah.
Which it came and it was an explosion. Remember the late 90s, the hype around everything, clicks, and nobody cared about revenue. The companies were, bid to tens of billions of dollars without really much financial success. And then it comes to a crashing halt, but the underlying technology keeps going and it's changed the world.
Yes.
Yeah. So that's the example.
That's the template. Yeah.
Okay.
Yes.
Now let's shift to another topic that you have spent a lot of time thinking about over many years, which is tariffs.
Yeah.
And the incoming administration's already said on January 20th, when we take office, China, Mexico, and Canada, here are the tariffs you're going to get. You've heard back from some of those countries saying, okay, well, we're going to raise your tariffs. Where is this going in your eyes? And what's the impact on global economy, on U.S. economy, and on investors?
Once again, I'm a bit concerned by the fact that most investors have reached this conclusion that these tariffs will hurt the rest of the world more than they'll hurt America. I think that that's a bit of a naive conclusion, because the rest of the world is not just going to passively sit back and say, okay, these tariffs are coming and we're going to get hurt by them, and what's going to happen? We're already seeing action. One of the very counterintuitive things, and I don't know how long this will last, but we'll see, is that since the election, one of the best performing markets in the world has been Mexico in dollar terms.
I didn't know that.
Yeah. Partly because a lot of the bad news has been discounted before that you went into that. And partly also because there is this realization that America still needs Mexico for other things. So I think there is a sort of feeling, and this can still change, that maybe there's a deal to be done here, which is the fact that if they don't come too hard on tariff for Mexico obliges by, being stricter on the border and other things. So I think it's a very uncertain environment that we're dealing with. In China's case, China, for example, may decide that, okay, if you're doing this, then we have to do much more to stimulate our economy now, much more to help consumption and stuff, which has been very depressed. So all of a sudden, China doesn't look that uninvestable anymore, which has become the thing. So I think this is the multi-factor model. The issue I have today is that everyone has a single factor, that everyone's obsessed with the US, everyone's obsessed with Trump, everyone just speaks about as if that's the only factor that will matter. In the world of investing, we know that's a dangerous thing. There are multiple factors which matter. It's never a single factor model.
Yeah.
And so I think that one of the other big contrarian trends that we could speak about is that maybe the impact of Trump on the markets, on the global economy, the US economy, is not as much as people fear, especially people who fear a lot of downside from it. And here's another very interesting stat, and I think a lot of people forget that and even though I don't believe it'll happen again, about the best performing market in the world during Trump's first administration was China. If you look at the stock market.
Is that true?
Yeah.
I didn't know.
So the stock market did pretty well because the tech boom was really happening in China. The Tencent, the Alibabas, they were running away. And so they were able to also manage the tariff stuff as well. So things can play out pretty counterintuitively is my point.
Yeah. And right now, the belief is that the U.S. will somehow get through it and everybody else has got to pivot. And you're saying that that's the piece that there should be a counterintuitive lens on.
Exactly, because one, markets already discount stuff. Two, things are very stretched, as I've said, between US and the rest of the world. And three, that the rest of the world is not just passive.
Right.
The other thing which could happen, as I mentioned in one of my top trends, is that the rest of the world could also decide to trade much more with each other.
Well, let's talk about that. But before we get to that, let's go back to China.
Yeah.
Because you were one of the first people years ago who said, who was underweight China and said that, there were issues around government and involvement and things like that. And now that's become a widespread notion, and many investors have pulled back. Is this the time to reinvest in China? And have you changed your thought process at all there?
Yeah, I mean, I'm less bearish on China. I still feel that China's long-term problems aren't going away, which is the fact that they're losing people every year. The population is shrinking. No country in history has been able to grow significantly above 2% when your population is shrinking.
No exceptions to that.
No exceptions to that, just because it's the most important driver of economic growth along with productivity.
Yes.
So if your population is shrinking,
productivity is not going to make up for it.
It's very difficult for productivity to make up for it, particularly when you have a government that's pretty interventionist, pretty status, as we have in the case of China. And they also have a very large debt burden. A lot of that is not on the government's book, but the private sector there, the
real estate.
Exactly. Real estate, property, massive amounts of debt. So at one level, I still feel the Chinese economy is in terms of a long-term decline. And I think that a 2-3% is my base case for China's economic growth rate over the next 5-10 years on an annual basis. Having said that, I think there is some in the rubble already now, because the market's down. If you look at the MSCI China, which is everyone's investable sort of universe, that's down 70-80% from its highs. And so there's some stuff available in that rubble in terms of that. And they have some pretty good technologies there, whether it's EVs or solar, and they have some stuff there. And some of the consumer companies that are trading at really cheap valuations and stuff. So as part of the overall contrarian framework, having some allocation to China possibly makes sense. Not to bet your house on it. I still feel there are, like other growth opportunities in emerging markets from India to Indonesia, which are relatively better and cleaner in terms of their growth profile. But I think that this lazy Wall Street consensus that China is uninvestable, I think it's time to sort of change that a bit.
Let's go. Let's extend from that to the intra-regional trade that will be fueled by the U.S. tariffs, and the U.S. Making it harder for countries will cause them to put together trade agreements between those countries, typically on more of a regional basis. You see more of that?
Yeah. In terms of, I think that we are seeing evidence of that. Countries doing, more bilateral trade, doing bilateral trade in their own currencies rather than going through the dollar. So as I said, that there is a feeling that maybe it's too hard to rely on America, especially because they saw what happened with sanctions on Russia. They're seeing now all the noise about tariff. They see that in terms of, the threats which are made about what's going to happen to them. So you're seeing this action take place in the rest of the world. So this whole idea, the thing, which a lot of the analysts have here on Wall Street, that the rest of the world has no choice but to get more smacked by all these actions. Well, the rest of the world, maybe it's a wake-up call for them that we need to sort of, do something here to try and offset the hit which will come from these tariffs rather than take it passively. So I think it's one of the reasons why it goes back to the big trends, that it's been an exceptional time for America, but such is the thinking today, where every good news for the global economy is interpreted as good news for America, and every bad news is also interpreted as good news for America.
And could this be good news for China in the sense that they're very active around the world?
Yeah.
Africa, South America now. They'll try to step in places where maybe American tariffs and other things have made it more challenging for those countries. China will try to do more trade with them.
That's what they really need to do. For example, one small thing which has happened here, maybe not small, but it doesn't capture like our attention, is that China and India have never been very comfortable with each other. And there was a big escalation in tension between these two countries in the last few years. What I'm seeing increasingly are signs of some sort of a rapprochement. So maybe China is realizing there that, listen, that in terms of the fact that we need to take India a bit more seriously here rather than treat them as this poor cousin of ours. So I think that there is a change taking place maybe in China's attitude as well. Early days, but change taking place. So as I said, every action has some reaction. Yeah. And we need to be conscious of this multipolar world rather than believe that it's all unipolar and the entire attention's here, but something is happening somewhere else. You know how it is, which is that's what the game of investing
has always been.
That's what macro investing is all about. That don't get so focused on what everyone's focusing on. Look left and right field and see something else may be moving here. And I think that 2025 will have some of that. That when we sit here a year from now, we're like, wow, we didn't quite think that it would play out this way. And I'm trying my best here to also focus that lens on
what's specifically coming out of that.
Yes, that's right.
I want to make sure I come back to another topic that you've given a lot of thought on. And you talked about when the U.S. first led the effort to put sanctions on Russia, and that's the dollar.
Yeah.
So where is the dollar in all of this? There was talk of maybe someday it won't be the reserve currency. Clearly, there doesn't seem to be a good alternative today or in the foreseeable future. So, it can continue to be the world's reserve currency because there is no other game on that one.
Yes.
Having said that, tariffs are another thing that caused countries to say, boy, this is painful.
Yes.
And actually, the Trump administration, I think they came out and said that countries that try to unwind the dollar as the reserve currency, they're going to go after even harder on tariffs. So how's this going to play out? Where is the dollar going from here?
Yeah, I think that, you're right, that there's no alternative for the dollar is something. But remember, this very expensive dollar is now beginning to hurt America as well, because it's something which is against what really the Trump administration wants. They want to help trade. They want to do that. So to have some...
to help American companies put things out there.
Yeah, but to have sort of such an expensive dollar...
makes it harder.
Yeah, makes it harder for them to do that. So I suspect the Trump administration may start to sort of talk down the dollar a bit into, from that perspective. Now, regarding the alternative, there is none. But it's very interesting what happened in 2024 and something I'd spoken about, that even though I wasn't quite right in saying that the dollar would decline, but I did mention something else at the beginning of 2024, which I think sort of played out. I said there is a move towards de-dollarization, and the two big beneficiaries of that could be gold and Bitcoin. I mentioned that in the beginning of 2024. And I think that that's what's going on.
I think you nailed that.
Yeah.
Gold was up 25% last year.
Even more. Bitcoin, I don't even want to talk about.
Yeah.
But none of us were able to really get much of it.
And actually, the Trump administration's helped Bitcoin. They've clearly embraced this as an alternative. So that's actually, that we should have attached that to the beginning of this, because you did hit that in 2024, which I don't think who else was talking about inflation. Gold and maybe Bitcoin, but it's certainly gold at the beginning of 2024.
Gold's been a big winner. And again, that's been partly because central banks around the world have been wanting to diversify outside of the dollar.
Yes.
So the de-dollarization...
They're using gold as a reserve.
Yeah. So again, how things can play out differently. My point that people were, even me, were thinking about, okay, maybe the dollar declines or something, but this de-dollarization can play out other ways. And the rise of gold and crypto in a way has been that.
Yeah. You still think that's a very long journey.
That's right.
Because the dollar in the U.S. and the 27% of world GDP, that kind of really still tethers it, but it starts to slip. Yeah. And you said that in 2024, and there's probably truth in that.
Yes. In terms of course, prices have run up a lot, so hard for me to know what to do about that. But in general, I think these are very long-term trends. And the dollar is not going to lose its reserve currency status. I didn't say that enough.
You never said that.
Yeah, but it's going to take a long time for these things to erode. But America needs to be careful about these things. And also, as I said, that the big sort of issue is going to be that when are the bond vigilantes going to start really pushing America to do something about the deficit?
Well, you and I have been on this, so hopefully one of the things that Trump, the administration, as they come into office here, again, is going to do is actually get that under control, because it needs to be. And I think there's general agreement among people like you and me, but economists and everybody.
Yeah, the only problem is that countries typically don't act until the crisis, and until they're forced.
Which is what you were saying earlier when you were talking about Greece and Spain and these countries that were really under the gun in 08, 09, and 10.
Yes.
They had to make structural reform. They did, and 15 years later, they're in a better spot.
Yeah, exactly. Even a decade ago, they were all dismissed as pigs, right? And even America, like in terms of like a decade ago, as we discussed, nobody was talking about America's growth miracle then.
They were not. And by the way, if you go back to 2010, it was all how soon China was going to be the world's biggest economy. Yeah. All the momentum was on the Chinese side.
Yeah.
And the U.S., we had mishandled debt. We'd mishandled the credit crisis. That was the dominating theme in 2010. You and I were there. Right. People forget that.
Yeah.
15 years later.
There were big cycles which play out. Yeah. So now we've had this massive cycle of American outperformance.
Yes.
It started in 2009. But remember, like in the decade before that, the stock market returns in America was zero.
Yes.
The entire 2000s, the S&P's return was zero. Emerging markets tripled in value in dollar terms.
Yeah.
Right. And now in the 15 years after that, the American stock market has gone up, whatever, 6 times.
Yes.
And emerging markets have hardly done anything over that. And neither has Europe. International investing's been dead. And so I think that's to bring it all back, that my big theme is the fact that it's been a great run. I still am a long-term believer in America's economic strengths. But I think over the next few years, if history is going to be even half right, then the remaining of this decade, we could see a big reversal of some of this massive outperformance that we have seen carry on into the second decade.
Last question for you. And this is the hardest because it's 1 year.
Yeah.
So we're talking 2025. And maybe you want to extend it a little bit, but alternatives then to the United States as a country to invest in for investors, what are the 3 or 4 that you like the best for 2025? But again, in 12 months, it's always hard to call. But over the next several years, as we under that macro theme that you said, which is, the United States, the outperformance and the dominant performance comes back to earth in one way or another. Where are the 3 or 4 or 5 places you'd want to be?
Yeah, but I'd say one thing here, which is the fact that diversification has been a terrible strategy in general.
For 15 years.
Yeah, for the last 15 years.
Yes.
There's only one stock market in the world of any significance that is held up to America's performance, which has been India.
Yes.
I still like India for the next few years. But I think that the broad thing is that what I'd be telling people to do, especially if they haven't diversified, and it's been good for them if they haven't diversified, but that this is the time to diversify in general. Even in places like Europe, which, things have been so bad, you can find opportunities in places like Eastern Europe, the Greece, the Polands, where things may be okay. Also be on the lookout that don't dismiss Germany and France completely. So just, in terms of be on the lookout that something may emerge out of there, maybe not in 2025, but a bottom is being set. But I'd say that apart from that, some of the peripheral countries, Eastern Europe, I'd say India, Southeast Asia, the Indonesia, Philippines, Vietnam. I think that all these countries deserve more attention. Even in the Middle East, like markets like Saudi Arabia, the UAE. I mean, like places like Dubai, they're absolutely
on fire.
Booming in terms of what's going on. So I think there's plenty of stuff that you can find in these countries out there. So the broad concept is that what I feel pretty determined about, that America's share of the global economy may remain for a long period of time around these levels, 25 to 30% range. It's sort of been there for a long time.
It's amazing. And actually, it was falling at one point and it's gone back up.
It's gone back up. So I'm more optimistic on that. But on America's share of global stock markets, that 70% or close to 70% we have of the MSCI, that just feels wrong.
Yeah.
So I think that's what I'm saying, that diversify outside and wait patiently for this to play itself out. And 2025 may be the first year in a while where that strategy makes sense.
It's very well said. Now, as I've said back to you a couple of times, what I'm hoping for is that number 70 comes down from other markets coming up as opposed to the U.S. market going down.
We all want a more benign resolution.
Exactly. And that's a great way to end it. Fantastic. As always, you're thinking on these things, your willingness also to talk about last year, what worked, what didn't. I mean, you're out there. Very few people are out there and held accountable.
Right.
It's easy to kind of go on television and talk about, this is what I think. Very few people have the tape rewound. So bravo. 2 quotes I'd like to end on. Both of them I picked specifically for you and what we're talking about here. You trying to look forward. One of the most challenging things for anybody in the world that we live in. The first one is Oliver Wendell Holmes, the famous jurist. Quote, "When I wanted to understand what is happening today, I try to decide what will happen tomorrow. I look back. A page of history is worth a volume of logic." And the last quote is Winston Churchill. He said, quote, "Everyone can recognize history when it happens. Everyone can recognize history after it has happened. But only a wise man or woman knows at the moment what is vital and permanent, what is lasting and memorable." That was Churchill, and you fit into that wise man bucket of looking forward and figuring out what's going to happen versus things that nobody else sees. So great to have you here. Thanks very much. I look forward to seeing how this unfolds in 2025, and I look forward to seeing you in the exact same seat in 2026. So thanks so much for sharing.
Well, thanks, Craig. Always really love these conversations.
Great.
Thank you.
All the best.